Alright. Good afternoon, traders. Alright. Should be up on YouTube, should be up here on the virtual trading floor. I'm at a different trading location today, so if anybody's got the YouTube link and can give me some feedback on the quality in there that I'm still continuing to work on broadly, it would be appreciated. And without further ado, we'll jump right into it with the disclosure. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. And we got the position disclosure here. Take a good long look at it so that you know if I'm talking my own book or not during the meeting. I had an Amazon on Friday. I had a very small amount of Google off the open this morning as an initial feeler. Obviously market weakness today didn't help on that split. Volume is too low on the YouTube. Okay. And now I'm on a different... Oh, man, I'm so bad at computers because now I'm on a different Windows setup here. The other computer is Windows 10. This is the new version of that. So, how do I change that? So frustrating. It's in sound. You would think it would be in microphone settings, but I think it's actually in sound settings. Sound devices. Well, and Pat, I know you had sound issues on the YouTube, and then I think you worked with our tech guy there, and all of a sudden that last video you did in the afternoon meeting sounded great. It looked great. It was like such good quality. I was like, man, I'm gonna have to step back and just let Pat do all the meetings going forward. And this new Windows is a disaster. I definitely recommend sticking with Windows 10 for anybody who is thinking about upgrading to whatever this new one is. Aha. What about this? Am I getting louder right now? Am I getting louder as I speak right now? You guys didn't change anything? I was listening to one of your last meeting and I thought the quality was awesome. I don't know if that changed anything or not. Ah, it's great now. That is what I want to hear. Oh, and the other thing I said I was going to do is I'm trying to turn off those alerts. So, bam, let me do that. That should turn off those alerts for today. All right. Hey, we're making improvements, right? I'm really trying to improve the quality there. So, let's actually jump into our meeting here. Whew, what a day. We closed down 0.75% for the S&P, about the same for the Qs, and only 0.2% for the IWM. So there is a little bit of improvement, a little bit of relative strength for the Russell, which will take... I mean, look, I think we all know Apple killed it today, right? Like, Apple killed the rally. The market this morning, what we talked about is that we were gapping up to near resistance. For the Qs, it was actually pretty close to resistance, like just about at that resistance level. The Qs have been relatively strong recently. The IWM, which has been a little bit weaker recently, was not quite there, but was getting close. And the SPYs were not quite there, but we were getting close either. I think we had a pre-market high in the SPYs at 389.25, 389.50. Intraday 389.09. I think the real resistance for the SPYs is like 390 to 393. So we got very close to resistance for the SPYs, not quite there. Exactly to it for the Qs, and a little bit further away from the IWM. But overall, things are looking decent for bulls, right? We got through the CPI and the PPI, and they weren't fantastic, but the market got bid up. We were worried a little bit about breadth on Thursday, and Friday made me feel a little bit more comfortable about that. Then we're gapping up this morning. And, you know, a couple days up in a row here to resistance. We were slightly extended as you start to get to that resistance. Not so extended that we can't continue. But what I was saying in the morning meeting today is, I think if you're bullish, what you would love more than anything today would be to have like a rest day. Just kind of rest in front of this 390 area for the market. Maybe show a little relative strength for the IWM because the IWM is playing catch up, and again that would have good breadth most likely for us for the rest of the market. But just kind of sit there, rest for a day, and then that can set us up for potential upside continuation. That's really what I wanted to see, and we're getting it. We're getting it this morning. If you're bullish, this is honestly what you wanted. You wanted this sideways action today. We gapped up really big, and like I said this morning, I felt that the gap up was taking away the long opportunity. Gapping into resistance, you don't want to buy that, right? But do you want to short it? And the answer is kind of maybe. I wanted a little bit higher prices to start looking for a short. Like if we could have gotten some upside price action early that made us even more extended, and then I getting like a shooting star candle on the small time frames into that 390 area. For me, I may have looked for some hedging type market related shorts. But with where we were opening, I was planning on being a little bit more less is more, looking for relative strength and relative weakness, potentially relative strength to buy. Potentially I thought that the growth stocks could show relative strength this morning with the dollar coming down. Of course, you would naturally think commodity plays would be what you would want to go to, which does make sense, but the commodity plays were gapping up so big that it was a little bit tricky. Thank you, Michael. So again, this morning just wanted to see, well, what's going to be in play. I had a couple names that were like upgraded on my list today that I could focus on. What's going to be relatively strong, I could focus on that. And then, you know, for the market, we're opening up, I thought, in a difficult spot to short or to buy. And again, the opening price action I really think is exactly what you want to see if you were bullish. We spent the whole morning digesting the gap, and then we're digesting the gap further on like a 15-minute chart. That's what we were talking about, like, you know, 10:10 to 10:30 when I was still on the radio. Finally, we have like a full 15-minute correction about 10:45. You can see that on the 5-minute chart if you know what to look at, or you can see that on the 15-minute chart right here, 9:45. EDMA on the 15 is just about caught up. So this is great. And then I was starting to wonder, as this 15 caught up, and especially when this bar started coming in at like 11:30, now that we have gone sideways here for the entirety of the morning, it really satisfies a lot of this upside extension. I wonder if we could get an upside grind here. Start grinding up into 390, 391, see what the price action looks like, something like that. Or even if we just sit here, you know, a consolidation in front of resistance, I thought would have been really bullish. And just when things are, they're looking okay, right? If anything, into like 1 o'clock, we pulled back a little bit. We were kind of testing lows for the SPYs. Qs were a little bit more relatively strong, but they pulled back a little bit, not the end of the world. IWM, you know, pulling back a little bit around 1 o'clock, but still above that opening low of 175. So we started to have a little bit of weakness around 1 o'clock. There was 1:30 when the Apple news came out, and the Apple news just trashed this entire market, honestly. So that Apple news came out that they're, you know, going to slow spending in certain areas of the company and also potentially slow hiring. Like it didn't sound awful, to be honest. Like if you like the specifics of the language, but the fears obviously are reading between the lines. Is this an earnings warning from Apple? And an earnings warning from Apple is obviously going to be no good. And I think that's what people are trying to read between the lines on. Because again, I thought that the surface language of the comments really wasn't too bad. But if you're trying to read between the lines and you're like, oh my God, Apple, which has totally led the market up for all of July and is the most relatively strong stock that's out there and just has been beasting higher every single day and has kind of been helping to save this market. If they're kind of giving a highlight here that their earnings are going to be no good, well, that's not good. So I think people were reading between the lines there. The stock was also extended. You know, I said in the morning meeting today that I didn't really have much of an interest in the FANG stocks because Apple's extended and the other ones are sloppy, right? Apple was pretty extended here, trading, you know, 151 and change with your ADMA down at 146 or so. So Apple is extended. The rest are sloppy. Amazon approaching resistance. I'm in this still from Friday morning, kind of sloppy. You know, Facebook was sloppy. Microsoft is still sloppy looking well beneath the high of that negative Maribozu. So just a lot of things to not be excited about with these FANG stocks. So what I was actually hoping for, and hope is a 4-letter word in trading, was for the FANG stocks, for Apple just to kind of rest today, and for us to see rotation into other things. So again, I was looking for those growth stocks. Those growth stocks traded really well. But first, I guess real quick, just to continue about Apple, that's what then wrecked the market. You can just see here, this is the candle in which the news came out for Apple, 130. Just, you know, this thing was just holding up above 150, relaxing, chilling. It was making for a boring trading session, but that boring trading session was generally bullish. This news just, I mean, just look at how this thing traded from, you know, 130 to 2 here. It was atrocious. And it seemed to have been priced in a little bit, but then just kind of resumed like a downside grind into the close. And that just, you can just see what the Qs did starting from 130. Filled the gap, overshot the gap, kept selling off, closed negative on the day. SPYs, same thing. Real weakness starts to hit. Intraday breakdown was actually a little bit before 130, but real weakness starts to hit around 130. They fill the gap. They continue lower. They close negative. IWM, maybe not the end of the world here, but even still, you know, the entire market was affected by this news. It's kind of started that downside run down. And at the end of the day, you got a not great looking candle here on the daily chart of the market. It was just like just a reason for resistance to continue to hold, honestly. And as of the closing price, I don't know. I don't really got too much to go off of here as of the closing price. You know, we're at 382.50 or so as I'm having this conversation. Our key levels are more or less the same. The 390 area on the upside is the resistance that has to be broken. It's like 372, 373 area on the downside is the support area that needs to be held. And we are just sideways range bound as we're starting to go into a little bit more of the heat of earnings season. And, you know, we'll see what happens. We've spoken about earnings season a lot. This is going to be one of the most unique and interesting earnings seasons I've ever seen in my entire career, because I don't think I've ever gone into an earnings season where everyone was expecting every company to miss. You know, everyone, the constant chatter on the street has just been, well, the analysts never brought down their earnings expectations like they should. They're totally overblown, and we're just coming into an earnings season here where everyone expects everything to miss, and it's just going to be interesting to see. In that type of environment, you get the chance that, like, if a company just is in line across the board, that could be something that a company could really rally off of, because the whispered number, if you will, is expectations are everything's going to miss. And if you get a miss, then how bad of a miss is a miss that's so bad that the stock can go down, right? I mean, we even talked about, like, it's incredible to me that JP Morgan was able to rally as much as it did. Because not only was JP Morgan's earnings not good, but they pulled their dividend because they're worried about capital. Like, that is typically really bad. So, yet, you know, the bank earnings overall here, you know, the stocks have traded well on them. And then we had the Goldman report out today, which I thought was pretty good, actually, especially compared to the other earnings reports. But this thing's also, you know, was up from 280 to 310 at highs today going into that report. So maybe some of the upside on that was kind of priced in at this point. But they also said, you know, it sounded like there was a bunch of negative worries they were throwing in there about the economy and stuff like that. So that's our banks. And then, you know, as far as trading focus for today, I wanted to see if growth could get a bid today. So, you know, what did I have on the list? I had this DNA on the list today, which gave a decent opening drive trade, and then I trailed it based off of this low. So I got stopped out on this candle when that low broke. It's a cheapie, a little cheaper than I usually go after, but this thing has the capacity to move and squeeze. So I was involved in that. I was involved in a firm, which wasn't my call out. One of you guys brought this up in the morning meeting today, but I really liked it. We had looked at a firm 2 days ago. 2 days ago on the CPI number, this was one of the strongest stocks in the entire market that day. Went green first and just was tremendously green all day, when by the end of the day the market itself like barely fought its way back to flat to small green, if my memory serves me correctly. And this firm was just kind of a monster. So on a day when I think these growth stocks can continue, a firm which I had no position in was relatively strong a couple days ago. This is something that I could potentially look at. And what price did we talk about? We talked about 24. We talked about $24 in the morning meeting. So 24 was the spot that I bought. And then there was a quick little pullback that I got to average down in front of, down to like 23.80 or something like that. And then this thing caught a great bid. I was a little nervous on the initial buy because of the degree of extension, but the risk wasn't terrible, 32 cents on it. And this thing gave a phenomenal opening move here. Phenomenal opening move to 24.80, so 80 cents worth of reward in 15 minutes. I raised my stop to the low of the second bar. Just trimming and trailing, following the game plan. I didn't want to have a super aggressive game plan on this one. I just wanted to put some money in my pocket. So when the market kind of deteriorated real quick here, we had this pullback at like 10.10, particularly a lot of the opening very strong growth stocks had like a pretty big pullback around 10 a.m. or so. You can really see it like in Snap, which I was also involved in, caught this move, but I've been swinging this. And then this thing, like, it didn't quite break that opening low, but this thing pulled in, like, it was dramatic on kind of what the opening move was. And this firm just pulled back, stopped me out. If you kept some of your stock, which I often do, but I didn't in this case, was being a little bit more defensive with how I wanted to trade it to just kind of lock in more money. If you kept some stock with your original game plan stop loss at the low of the day, or even all of what you still had left, you never got stopped out by a few pennies here, which is probably as much luck as it is skill. But it became a 15-minute kind of price correction, the low holds, and then this thing continued to be tremendous. This pivot low here right after I got shaken out gave a fantastic move up to 25.40. I wasn't involved to capture that, but this still turned into being, a failed trade for me more or less that I was able to make some money in, and I just followed my game plan. I did exactly what I wanted on it. So off the open, it seemed like growth was just kind of where it was at. Like SoFi was another one. The SoFi was kind of really breaking out on the daily chart. And even at the end of the day, these are some of the green stocks that you're able to find, right? We know that our SPYs are down 0.75%. We know that the Qs are down 0.75%. But, that SoFi that I just mentioned is up 0.5%. Snap is up 1.7%. The Affirm that we mentioned is up, 3% on the day. Peloton's up 2% on the day. Robinhood's up 2.5% on the day. So it was certainly the right idea to go after these growth stocks today, and then it was just unfortunate that the broader market weakness that came in from Apple caused these to fail, and caused some of them, like I said, the SoFi chart up here, to give a really not so great looking upside tail at the end of the day. And this thing could have closed at 650 or so. It would have been a real nice breakout continuation candle on this SoFi, and the market caused that to fail. So it's always interesting. We'll see how we gap tomorrow, and I don't know. I honestly think it's a coin flip on how we gap tomorrow with where we closed today. But we'll see how we gap tomorrow. I always wonder when I look at, again, SoFi is just the one that I have up. I'm sure that, Snap probably has an upside tail. Ooh, Snap looks small, interesting, because it wasn't that small. Didn't feel that small when I was actually trading it. Some of these that have these, like, upside tails in here, technically that's a bearish signal, but the flip side is relative strength. So on the one hand, today's candle would say don't buy it tomorrow. On the other hand, you go, well, if the market just recovers quickly after the Apple news today, maybe the things that were relatively strong today can see continued relative strength tomorrow. So I don't know. We'll see. And that's kind of where your trading opportunity was today. I think going after growth in the morning, or being aware, paying attention, and being ready when the Apple news hit to short Apple or to short the indices off of that. That's where your trading opportunity was today. And it was really all kind of on an intraday basis. And at the end of the day, from a big picture technical perspective, there really is no updates, right? We're just still in the same range that we've been in. We're almost at a full month. We're almost at a full month here of the SPYs being stuck more or less between 370 and 390. Full month of, more or less choppy sideways price action. The market has been waiting. Was the CPI going to break us out of the range higher or lower? Was the PPI going to do it? Is the earnings report that's going to do it? Is it going to be the upcoming Fed meeting, I think is next week, going to do it? Well, I don't know. It wasn't CPI. It wasn't PPI. We're still in the range. So we'll see. 390, 370, they continue to be the big spots to look at. And while we're still in this range, it's going to be about our same stuff. Looking at stocks that are in play. And luckily, we're going into earnings season, so there should be a lot of stocks in play. Looking at relative strength and looking at relative weakness, and really trying to, make a living for yourself on these kind of individual stocks while we wait for clarity on the market. That's all I got. that's all I got. So I'm going to scroll up here in the VTF, and I'm happy to answer any questions that you guys have or to take a look at any individual stocks that you guys have. I'm going to... What is our IBM doing right now? Oof. IBM's back to its usual games of being down on the earnings report. Yeah, not great looking from IBM. I'll look at the numbers later more closely. Alright. First question I'm seeing here is at 4:16 p.m. So if anybody posted anything that they need commentary on prior to that, just repost it for me. But 4:16 p.m. from Chinggis. Can you please help me define what a consistently profitable trader looks like and feels like? How does this trader's day-to-day look like? What kind of qualities does the trader possess? And what actions the trader takes to achieve those qualities? And what the trader does to consistently progress this career. Sure, so it's kind of a loaded question and a lot of pieces to it. The best, I guess we'll start from the beginning here. What does a consistently profitable trader look like and feel like? A consistently profitable trader looks like someone who is going to be disciplined. Oh, and I think I can use, if we're doing a chat, we don't need, we can zoom to me. The quality doesn't look great on my end. Maybe it looks better on your guys' end, I don't know. I had to take off my Optios headset. I get 10 minutes to wash my hair out when the meeting ends. Anyway, so to answer your question, the biggest thing to me, I've always felt that a consistently profitable trader looks like a disciplined individual, like first and foremost. And it's the same things that I repeat over and over and over again. As much as we spend all of our time focusing on technical analysis and how to execute and everything else, the key to success in the trading business is about consistency, risk management, and money management. That is the key to this business more than anything else. You have to have rules, and you have to follow them with consistency. And I mean like every single day. If there's 20 trading days in a month, you got to have that discipline 20 out of 20 trading days. It can't be 15 out of 20 trading days. It's not going to be enough. You create rules for yourself for the downside, your maximum loss, how much you want to risk it per trade or risk skew, those types of things. And then you have the discipline to walk away when you hit that max loss. And you say to yourself, the next trade that comes along my screen does not matter because I have to follow my risk management discipline and it's more important than anything else. And then that trader has rules for every single thing that can happen in trading. Rules for entries, rules for exits, rules for game planning for reward maximization. And then again, follows them consistently. The only way that you can be a consistently profitable trader is to do the same things over and over again, right? Is to have a consistent approach. And the only way that you can have a consistent approach is to have rules. So a consistently profitable trader, what does he look like? He looks like almost like a machine who has the flexibility of a human being, right? And knows every single day I need to follow my money management, my risk management, my rules management. A consistently profitable trader is not someone who makes money every single day. Really good, consistently profitable trader maybe makes money 4 out of 5 days a week. Maybe it's even 3.5 out of 5 days a week. Maybe it's even 3 out of 5 days a week. But if that 3 out of 5 days a week is structured in such a way where those up days are more than those down days, that's all you need, right? And that's the other thing. If you want to talk about what a consistently profitable trader looks like, I can see it, like, if I ever need to look at a trader's account for any reason, or even my own account, I can see it so fast. So fast. Takes me a moment. I just will look back at the day-to-day of a trader's account going back a year. And what I want to see with consistency is a downside level that basically never gets breached and an upside level that's a multiple of it. If that's what I'm seeing, I'm looking at a consistently profitable trader. If what I'm seeing is not that, then I'm not, right? It's really that simple. And if I'm not seeing it, what am I seeing? It could be a number of things. In some combination, though, it's not the up days being a multiple of the down days. It's, maybe sometimes I'll see a trader who is disciplined on the downside. They never let themselves lose that maximum amount, and it's very consistent there. Maybe it's $500. I can see it. I can just eyeballing it, looking at the P&L day to day. Oh wow, this trader has almost never had a day. And you see the bad days; they're all around the same. He lost $430 today. He lost $480 today. He lost $510 today. It never is really breaching that $500. But there's no $1,000 day. There's no $1,500 day. There's no $2,000 day. That's not going to be a consistently profitable trader. That's a trader who needs to work on reward maximization. Or sometimes I'll see, wow, like this trader, their maximum loss, they never should be losing more than $500 a day. And this is great. Trader posts $1,000 a day, $2,000 a day, $25,000 a day. But I'm not seeing that fine line on the downside, the negative days that never breach that $500. I'm seeing like, oh, today he lost $480, but the next losing day I'm seeing on here was $1,400. This person's not supposed to lose more than $5. And then there's another day where the trader lost $980. And here's another day where, oh my God, this trader lost $1,800. That's also a trader who's not going to be consistently profitable. This is what it comes down to. I'm not talking about, and look at what I haven't said. I haven't said like, oh, like the consistently profitable trader, he can really read his charts, right? He really needs to know how to execute. That's part of it. But that's not, that's like, I really think that you can be like a very mediocre trader and be profitable in this business if you have rules, you're disciplined with them, and they're in place for risk management and reward maximization. So that is what a consistently profitable trader looks and feels like, to answer the first part of your question. What does the trader's day-to-day look like? Well, probably because of the same level of discipline that enables the trader to do that, it's probably a fairly uniform process to what this trader's day-to-day looks like. Most likely, it involves an early start to your research, getting involved in the virtual trading floor early, doing all the things I say that I do, which is getting into the virtual trading floor and typing up every single symbol that gets communicated pre-mark on the VTF. Whether it was from another trader, or whether it's from Pat posting all the news that he gets in there, reviewing it, looking at daily charts and looking for opportunities, creating a watch list for himself or herself, and getting alerts into the system so that he or she can be aware of when his potential trades are approaching entry-level points. I think I answered the next part of your question, and then the last part of your question here, which is also a really good part, really valid, is what does this trader do to consistently progress in his career? And this is actually also really important. The number one reason why an entry-level trader fails in the business is because of a failure to manage money and manage risk properly and consistently. No doubt about it in my mind. The number one reason why an experienced trader or a previously successful trader fails in the business is because of a failure to adjust and to adapt to new market environments. So what is a trader doing to constantly progress in his career? Always learning from as many resources as possible, thinking about different approaches, thinking about different game plans, thinking about different things that can be implemented into your trading over time. And then even when you're seeing, look, part of the reason why I'm even here to talk to you guys today is because I was never satisfied with my learning and trading. Because the way that I first learned how to trade in 2010, 2011, it worked really well for me. Beginning of 2012, is I primarily traded to the short side, day trading only, more based on tape than on charts. And I was able to make money with a disciplined approach off volatility to the short side. And it was great. And then it stopped working. It's like, I don't even begin to teach the trades that I was taking 12, 11, 10 years ago. Because they don't work. They don't work at all. The market changed. But luckily, even in periods of time when I was doing well as a new trader, I wanted more. I traded with a bunch of tape readers, but I wanted to learn more about charts. So I was going out of my way to learn charts. I was working late, reading every book I could get my hands on. Going to every free resource I could get my hands on. Trying to learn more about charts, learn about other things, other time frames. So then eventually when that market changed, I already had enough knowledge to be able to make the change too. And that doesn't mean I didn't go in a slump. I did. I went into like the first real major trading slump of my career in 2012 when the market environment changed and those strategies that I was using didn't work anymore. But I was open-minded. I had already taken the time to learn. And then, honestly, this is when T3 was the most important to me in my entire career. Because there were other seasoned, experienced traders of the company who had been doing this for a lot longer than I had been doing. And I was able to go to them and present my problem and listen to them about what adjustments I could make to do it differently. My time frame on my trades changed. My approach on my trades changed. I learned a lot more about technical analysis and implementing that. And then it's still been an evolution. It's still been an evolution. I'm still learning. Like, even, now it's 2022. I'm talking about a big change I made in, 2012, 2013. But in the last, 2 years, I've made, further adjustments to improve my trading. I have, really started to implement a lot of what I call market dynamics into my trading. Understanding sentiment, understanding positioning, understanding option flow. I've incorporated more fundamentals in my trading over the course of the last, 3 or 4 years. More macro type fundamentals. Still not going in and necessarily analyzing balance sheets or anything like that. But that's what the trader is doing to consistently make progress. Once I was told when I was a new trader, and I'll repeat it because I still think it's true, once you start learning in this business, probably means you got one foot out the door. Because I'm still learning and I'm still improving. So thanks for the questions there, Chinggis. Thanks for setting off the conversation. They were great, and I really hope that it helps. Alright, next in here was from Ryan. Last week I asked if you put bids in before the open. I meant to ask if you ever place a to fill at your breakout levels. I don't really understand what that means. That are above the current market. You can't. So I have alerts out above the current market, pre-market. But anything that's like a momentum trade that requires me to take liquidity, I'm not doing pre-market. Like anything where I would have a buy stop to enter, like in a firm today, that would be a place where I would consider putting a buy stop to enter, or at least taking the offer to enter the position through the level type of situation. Anything like that, I can't do pre-market because you can't even enter. You can't enter market orders before the market opens. And I wouldn't want to have like a stop, even like a stop limit, which I don't know if that would even work pre-market either. No, for those types of trades, I wait for the market to open. The only thing I'm putting out pre-market generally is limit orders, and I'm typically only doing it in stocks that I'm already in. So I have a preset game plan, and it's a swing trade, and I'm planning on adding stock here or buying stock here. So I put my limit orders in early because I don't care if I'm getting filled during market hours because I have a game plan in place, or if I'm getting filled at 6 o'clock in the morning or 5 o'clock in the morning even. I don't care. New trades a little bit, you got to be cautious. I did enter DNA pre-market, which worked out for me. But if I'm doing that, I got to make sure the liquidity is there, which it is because for DNA it's a super thin stock. And in addition to making sure that the liquidity is there, I got I guess that's the biggest thing is making sure that the liquidity is there pre-market. I'm still not getting that heavy. So I hope that helps. Dan the Man from Mr. Trees. Which news network does the market listen to when it has these immediate reactions to random companies? And I'm killing it with the stash here. I need to shave. Once I got the headset on, then it's tough to clean up further. Which news that would probably be a question I would direct towards Pat. I don't think it's necessarily like a news network. I'd be curious to know what Pat says about it, because Pat's our newsman. I don't think it's really a news network so much as it's just like, if it's real news, where's the source breaking from? Like, who can get that news the fastest, right? So Pat's saying Bloomberg Terminal or Reuters, I would say. Yeah, and Josh saying that the algos, and that's what moves first, are programmed to about 700 sources usually. So that's what moves the market first, right? Is that there's all these algorithms in the market that are just constantly scraping the internet for news. So like the millisecond that something hits, the algorithms are trying to take advantage of that by moving the market before anybody else has it. So it's going to be one of those like news resources usually that is like a breaking news resource like Bloomberg or Reuters. It's not going to be like an opinion-based, news resource like a CNBC type of thing. CNBC, as a matter of fact, is usually very late when it comes to getting news. Like by the time CNBC reports stuff, you could almost potentially take the other side of the trade. So yeah, Eddie on here. So I hope that helps, Mr. Trees. From Eddie on here, or you can join a VTF and allow them to do most of the work for you. I've been killing it ever since I joined, no matter what the direction the market's heading. Awesome, Eddie. I'm really glad to hear that you're getting a lot of value being on the team. I do always want our virtual trading floor to be a give and take, right? Where we are all here supporting each other. We're all here, providing our trading ideas, and it helps everybody get better. So good stuff, Eddie. Keep it up. Dan the Man. Don't you think we're going into the same trading environment as 08 through 11? No. Maybe because it's a bear market, but this is a very different type of bear market, I think, than 2008. Does a bear market favor the short side? Maybe. Shorting is harder than being long, in my opinion, but that's where the market is at right now. Yeah, so I definitely agree on that last part. I have always found shorting to be more difficult than being long. And I started my career primarily trading to the short side, but again, it was a different market environment. At least in the last 10, 11 years, partially for obvious reasons. The market has more or less been going straight up for 10, 11 years. It's been easier to be long than short. But it doesn't mean that there hasn't been some bear markets along the way, right? Like 2015. In some ways, 2015 was similar to what we're experiencing right now. 2015, I think we went down like 19.5% for the S&P. So it's technically not a bear market, but it was one of those environments similar to now where the average stock was down like 30-40%. We here as a team, we were pointing to it for a while. Well, oh my God, is the S&P ever going to breach the 20% mark? And that was when the average stock was already down, 40 to 50%. And then we finally had the S&P kind of breach that 20%. 2008, 2009, I think was much faster because there was a real financial crisis going on. Like there was a real chance that the entire monetary system as we know it was going to completely implode. It almost got to that. I don't think anybody is talking about that this time around, really. This seems to be more of like your run-of-the-mill, if you will, recessionary bear market type environment that's being caused by, an increase in interest rates, a decrease in the multiple of the markets, a little bit of a blowing of the bubble. So there, it's a little bit maybe like the tech bubble in certain ways. It's a little bit maybe like I think there was a big market pullback in '94 that you could draw some similarities to. Obviously, every environment is new and unique, but the big thing here, I think, with this bear market is 2008 was just significantly more violent, I think, in 2009 than what we're kind of dealing with right now. And again, I know that a lot of those growth stocks are down 75 to 93%. So if you are an investor who got suckered into buying those things in, February, 2021, and you're still sitting on them in your portfolio, and you're like, oh my God, I forget about the stock market, I got everything down 80% in my portfolio, then yeah, it's a downright depression for you. But that, we here as a team in the ProDesk Virtual Trading Floor, our team, we were saying was a bubble then. So if you're part of the virtual trading floor, then hopefully you're not invested in any of these stocks when they were at their bubble peaks. The question at this point is how much down is down. So the interesting thing about your question that I was thinking about when you said it is a bear market a good place to short? Well, what does that mean, right? So bear market means that we're down 20%. How much is, in history, if you go back, how much, and I don't know this, I should know the statistic, I don't know it, I've seen a lot of the information on the variance, but I don't know what the average bear market pullback is. Maybe 27%, something like that. It's a guess. But there's bear markets in history where we have gone down exactly 20%. There's bear markets where we've gone 27%. There's bear markets where we've gone down, 40, and some of the worst ones in history are more like 50%, like the financial crisis. So the question is, when you're looking at a S&P that's down, and I'm not sure, what we're down at this point right now, it's around 20%, a little bit more than 20%. Is it better to be, just going back to history, forget for a minute about the fact that the yield curve is inverted, there's recessionary talks, like we could get into an entirely completely different conversation on the current state of the market and make a bull case for it and make a bear case for it and all that. We've done it 1,000 times. But just, if the question is very broad, when we go into a bear market, is it better to be short or is it better to be long? It's probably better to be long. It's probably better to be long. Unless this is the bear market when we're only down 20% right now, we go down 50%, well then it's better to be short. But I would say if you go back into history, if the average bear market is 27%, but every single bear market in history has led to new all-time highs, sure, we could see another 5-7% then just to get to average, and I'm making that average number up, but then you're shorting for potential 5-7% reward, or you could be buying for 20+% reward because every single bear market in history has ended with new all-time highs. So if you think about it like that, and again, just trying to make this a little bit simplistic and not think about the specifics and nuances of the current environment, but if you think about it in terms of history, every time you go into a bear market, you probably are better off being long than being short as soon as that bear market we've entered it. But obviously, you've got the bear market where we go down 40 to 50%, in which case, I mean, in theory, if we're down 20% right now, very big picture, do you want to be long or do you want to be short? You would need this bear market to go down another 20+% in order for it to say that it's easier to be short than long. And again, I'm making this like we're taking all of the nuance out of this. It's a much bigger conversation. But I think that kind of answers your question. And we've seen a lot of volatility. That's one thing that is consistent with bear markets, is volatility. And the question is, can we have a base and eventually kind of break out from it? Cool, great question, everybody. Thanks, Eddie. From Rich Carter, T3 is the best place to be for traders. I wouldn't be any place other than T3 to trade professionally. I'd love to hear it, Rich. You and me both. All right, well, looks like we got through the questions here. Today's trading session was pretty straightforward. I wish we would break out of this consolidation soon so I can feel like we have a stronger advantage. Awesome, Mr. Trees. Hope to get you in here at some point. But for now, we're still range bound. So let's see how we gap tomorrow. We'll assess the gap. We'll assess the new earnings reports. We'll try to figure out what's in play. We'll try to figure out where we have an advantage, and we'll take it from there. So good night, everybody.